48% of Americans are concerned about their money and the safety of their money in banks today. We're going to be talking about what might happen out there, what probably will happen, and how these possibilities will affect you in your checking account, in any loans that you have out, like mortgages, car loans. We're going to answer questions about that. How this might impact your deposits, like if you have paychecks that come into your accounts. What happens if your bank goes down with that? We're going to talk about all those things and more coming up. Hey everyone, welcome back to the Poplar Report. This is Steve Poplar, and I'm an accountant by trade, and we're trying to address topics here on this channel that the mainstream media just won't do. Whether it's because they're too lazy or because they're just too corrupt. We're going to be talking about them here, though. Everyone's asking about these questions, aren't they? Everyone's talking about what to do with the banking crisis. Is this going to cause them to lose money? And what can we even be doing about it? Go out there and find me mainstream media sources that are talking about practically how this will impact everyday people. And the answer is there aren't any, and they're not talking about it. So we're going to talk about it. First off, let's talk about auto-deposited paychecks. If they are depositing paychecks in your account for you, it's great as long as your bank is up and running. If your bank stops working, what happens to that money? So this is going to be tied pretty closely to what happens to your checking account. Now, you are insured up to $250,000 through the FDIC if it's a bank. We're going to be talking about credit unions here in just a moment here, and that's going to be part of this thing. You want your paycheck to be landing in a bank that is secure. Because if your bank defaults, or if it gets taken over by another bank or something along those lines, if the FDIC has to step in and insure the money that's in your checking account, they may lock it up for 4 or 5 days. That's very possible. They could lock it up over a weekend. They could lock it up to 2 weeks. So you may not have access to that money for 2 weeks. That's why I keep saying everyone should have 2 months worth of cash essentially in their homes, because if your money gets locked up, in the best case scenario, if the FDIC comes through and everything's working just hunky-dory, you're still going to lose access to your money for a period of time. How long will that be? And I keep talking about this. The FDIC has 2% of the cash that it would be required to insure all of the bank accounts that it supposedly will cover. 2%. So if more than that go down, where's it going to come up with the excess money? Where's the rest of the money going to come from? Is Congress going to step in and start just bailing out banks willy-nilly? Is the Federal Reserve going to just start printing money like it's going out of style? Probably, but how long will it take the legislation to get through? Are they going to try ramming through a bunch of other stuff with those bailout packages, and will that get stopped up in petty politics and all that kind of stuff like that? Probably. So how long will it take you to access your money? However long, until the FDIC comes through and actually starts making those deposits accessible. So what do you do about it? One option is you can start trying to get paid on a paycheck, on a paper check. If you don't need access to that super fast, then that might be an option for you, for them to start mailing it to you or start giving it to you in an envelope at work. The other option is to move the auto deposit from that bank account to a more stable, safer bank account. You say, Steve, how do I know what a more stable, safer bank account is? And the answer to that is probably credit unions. I've been looking into it a bit, and it looks like the consensus is that credit unions are not nearly as susceptible to this banking crisis as banks are, for a number of reasons. Let's go through them. First off, if you deposit your money at a credit union, you're also insured up to $250,000, not by the FDIC, but by the National Credit Union Administration. It's kind of like the FDIC, but it's like a different government agency. So that might actually turn out to be good for you. If your credit union goes down, you're still insured, but it's different than the FDIC. So therefore, if the FDIC gets tapped out, there may still be money sitting in the National Credit Union Administration. So that Credit unions are nonprofits, so they're not engaging in the risky behavior that for-profit banks are. Credit unions want to make sure that they're breaking even. They want to make sure that things are good, but they're not going out there and, quadruple levering up on super risky assets like the main banks are. So credit unions probably should be more stable. So you might want to open up a bank account with a credit union. If you only have one bank that you bank with, you might want to open up a credit union account and just kind of spread your money out a little bit between the two of them. And the credit union would probably be a better place for you to deposit your money for work and that kind of thing. I know it creates more logistics. It's better to have it in your midst, but if you have to kind of make a decision on this, because obviously the answer to this is you should have silver, gold, you should barter for everything, you should be self-sufficient, then you don't have to worry about the banking crisis at all, right? But is that realistic for everyone? I know that it's not. It's not realistic for me, and it's not realistic for a lot of you folks out there. If it is realistic for you, then go for it. Go do it. You hear me talking about that, and honestly, I've taken that route on my retirement funds. Also, the credit unions don't service corporations so much as they do individuals. So when we talk about the insured deposits up to $250,000, most banks have 36% of their assets or their deposits are above that $250,000 limit. So 36% are uninsured. Now the uninsured bank deposits are the ones that are skipping town and getting out of a bank super fast. When there's a bank run, it's usually the uninsured deposits. But credit unions have, even the biggest credit unions are down more, like 9% of their assets are in uninsured deposits. So it just makes them more stable that way because they have less likely of people just corporations pulling out billions and billions of dollars. All right, so let's move on to the next question. So we talked about auto-deposited paychecks, what would happen with them, credit unions. Let's talk about checking accounts. What happens in your checking account? If it gets locked up, the FDIC funds will probably come through. Now, what we've seen recently is that they've been just selling off a bank's assets and deposits over to another bank. So like if JP Chase buys out your bank, you might not see any kind of issues at first. It may just, money will just keep flowing. You'll keep going to the ATM. You'll still get everything, but now JP Chase will be now the one paying you your money as opposed to your previous bank. So if it gets bought out by another bank, it should be pretty seamless. If FDIC bails it out, like I said, they have up to 2 weeks before you may have access to that money. Now, when was it Silicon Valley, when they went kablooey, their money was locked up for, I believe, 3 days. So that is a problem. But let's talk about, like, if you have auto payments going out of your checking account to other banks, like you've written checks or you've set up ACHs to go to pay for things and everything like that. What about those? Well, the answer is if they lock up your funds, those ACHs, those checks will not move. So those things will not be processed. Those payments won't be made. So if you're in that situation, the first thing you should do is you should call whoever it is. So if it's a mortgage company, if it's whatever, you should call them up on the phone and be like, hey, this is what's going on. Can you give me an extension or whatever for this? Or how should I pay for this? Or how should I go about this, right? They will probably be very understanding, probably, if you give them a call and let them know what's happening. If that happens, they may give you an extension. They may give you, whatever. They may make arrangements with you. That's probably the best thing to do. Even if you can't pay, if all your money's locked up and you can't pay, still give them a call. That's good for any time that you're going to default on any kind of loan or you're not going to make a payment on something. If you can't make a credit card payment, call them on the phone and you'll be surprised if you can give them a semi-reasonable reason and you haven't been behind on your payments before, they'll probably give you some grace there. That's something that happens out there. So please do pick up the phone call places before you don't pay them, and you may find that they will take care of things, or at least give you a little bit of flexibility on that. What about loans? What happens if you have a car loan? What happens if you have a mortgage with the bank that gets bought up? You probably won't notice too much of a change, but there are a couple things you need to be aware of. The new bank will have to honor the terms of the arrangement with you as long as you stay current on your payments. If you get behind on your payments, you may see that things may change. Also, they may try to get you to sign something, okay? If they try to get you to sign something, be very wary, because they may be wanting to get you over onto new terms. You may not be required to sign these things, and if that's the case, you should get advice. You should read through the materials very carefully. You should get advice. If you have questions that are legal questions, ask a lawyer and get help. Don't just sign things just because they tell you that you need to sign things. So if a new bank buys up your loan, which they're doing that constantly all the time in the background anyway, you're generally okay as long as you don't get behind on loans. If you get behind on paying those loans, then things can change very dramatically. So try to stay up with those. Once again, call them. If you're going to get behind, if you're having issues, call them, let them know what's going on. That may change things. They may give you some more things. If you have more questions about the banking crisis and how that may impact things, I know a little bit. As a tax accountant, I've seen a lot on people's tax returns. I've seen a lot of people's finances opened up. So I've seen the back end of people dealing with banks, people being behind on loans and all that kind of stuff like that. So I do have some experience with those things. Type them down in a comment down below, and I'll see if I can help you out with that, or if someone else can. If you found this video to be useful or helpful, please hit that thumbs up button. Give us a like. That helps it get out to more people. And hey, there's another video right here you might want to check out. That's always a great way to support the channel too. Just click on the next video from this channel and just roll right into that. Thanks so much for watching. Steve Poplar of the Poplar Report, out.